we stand on guard for thee. God, keep our land glorious and free. O Canada, we stand on guard for thee. O Canada, we stand on guard for thee. Please join me in a toast to the Queen of Canada. Queen of Canada. And a Rotary International.
Thank you, David, and I'm sure that was a Juno qualification in terms of our singing today. I don't know how many of you had an opportunity to take in any of the Juno Awards and the presentations, but certainly if you watched last night, you were a proud Canadian. It was an incredible, or proud Londoner, it was an incredible show, and it was from 6 o'clock on, it was London, Ontario on the CBC. We want to say thank you to our March sponsor for the guest luncheons, Community Training and Development, and of course, Greg Schenkel. We have a number of guests, and we would like now to have Bruce McCully come forward to welcome our guests in the traditional way here to the Rotary meeting. Bruce?
Thank you, Jim. Welcome everybody to the Rotary meeting. Hopefully that gets me off the hook if I missed anybody when you came in. I'd like to introduce our guests, our guest speaker today, Kelly Roberts, if you will stand and remain standing until I've introduced everybody, and Alex Purda. We also have Rashad, who will be joining the club today, and Paul Hubert is here somewhere, yes. Damien Wagner, our exchange student, is here, and Lily Lang from Western Rotaract, and also Tatiana from Fanshawe Rotaract. How do we welcome our guests?
It's always good to know that Damien is here and active, and he isn't always able to make it to the meetings, but we want to make sure that everybody says hello to Damien while he's here. Damien, we hope you've had another great week. Thanks for being here. Speaking of the Rotaract, I just had a short conversation with Lily, and they, the Western Rotaract has a plan in the next 3 to 4 weeks to do a combined Rotaract and Rotary meeting. And she will be sending out a formal survey, but just as a straw vote to give Lily some kind of idea, how many of you would be interested in joining the Rotaract for a dinner that they might hold around dinner time? So there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 people. There, it gives you an idea, Lily. And Lily, thanks for taking that initiative. Rotarians are always Rotarians, no matter when and where. We want to just draw attention to a Rotarian who passed, Rick Casson, passed on the 9th of March. Rick was a good and fun-loving Rotarian, and noted by a number of our Rotary friends who remember his time as a Rotarian here from 89 to 99, and again in 2009. And there will be a celebration of Rick's life sometime in May, so please just note that, and if it's possible to join into that celebration. We had a vote 2 weeks ago on 4 projects, and the results of those votes are in and have been presented to the Board of Directors, and I'd like to reveal that to you now. Except that it's my little video isn't going to start. So after all of the voting, all of the housing, the other three are all deserving, of course, of support and consideration and will down the line. This recommendation was taken to the Board of Directors at the meeting this past Friday, and a motion was passed that we will support the London Affordable Housing. The complete memorandum of understanding is now under development, and Heather is heading that up as we make contact with the people there, and we will be notifying the other applicants of the results of the voting. So thank you very much to everyone who took part in achieving this. And as we go forward, it is one tiny piece in helping solve some of the problems surrounding homelessness and poverty in our city. Well, now we have a very happy occasion as we induct our newest member to the Rotary Club. And I would ask Howard Shears, who is the president-elect of the Rotary Club of London, and also heads up our membership committee, along with Heather Broadhead, to undertake the induction of our newest Rotarian, Rashad.
Thanks, President Jim. So it's our my pleasure today to induct our newest member. So I'd ask Leanne and Rashad to come forward, please. And Leanne has sponsored Rashad, so she's going to introduce him a little more formally.
Thanks, Howard. So today I have the great pleasure of introducing to you Rashad Ayash, who will be inducted into our club today. Rashad and Sammy became friends back in 2002 when our mothers actually introduced the two of them. They went to Masonville Public School together and then on to A.B. Lucas Secondary School, where Damien currently attends high school. After high school, Rashad went down south to Texas and pursued an associate degree in computer sciences in San Antonio. After that, he started a bachelor's in civil engineering at the University of Texas, but then decided that that wasn't quite for him. Rashad has a very entrepreneurial spirit. He likes to start things, he wants to be his own leader, he likes to be involved in many different things and bring his thoughts and ideas into each and every one of those. So Rashad got into looking into Google Glasses, 3D printing, virtual reality, blockchain, canvas, anything that has anything to do with tech, he's your guy. Coming back in here, he actually got an office basically right next door to ours, and he got interested in PI homes and what we do, and he's actually now the person in charge of setting up our smart home features in all of our houses. Rashad also has his own real estate company, and we are doing a joint venture together on a couple of projects right now. He is also the owner and CEO of the Canadian division of the Brazilian apparel brand, La Bella Mafia. So if you're looking for some apparel, he's also your guy. And as a lot of you actually already know, Rashad has jumped right into Rotary. He's been setting us up with these YouTube 3D videos of our meetings, and he's very excited to do more, and I know that he can do more. And I'll now let Howard Shears do a proper introduction.
Thanks, Leanne. So Rashad, you have been proposed for membership in the Rotary Club of London, and you have been by Leanne and have been duly elected. Therefore, it is my pleasure to formally induct you into the club. So I understand that you are aware of Rotary requirements, much more so than I'm aware of what your business does, now all the tech side of it, and that you have indicated your willingness to follow them, as well as your willingness to offer your services to assist your fellow Rotarians in their community and international projects. As you know, Rotary is a service club, each member performing what Rotary terms as service above self. In addition to service, you will have the benefit of strong bonds of friendship with fellow Rotarians, locally and worldwide. And now I'll ask Jim to present you with your Rotary package and pin.
First, Rashad, you can now take that sticky off, and you can wear this badge that will identify you to all the membership. You'll know that it's red, you'll wear that for 6 months, just so that people know that you are one of the newer Rotarians and make sure that they welcome you here. You will then be issued one of the official gold badges after 6 months. We have a Rotary pin for you that I am proud to pin you with. And as the Sergeant at Arms will point out, we encourage you to wear your pin at all times. But this is a new version of the Rotary pin that includes the wheel and Rotary in the same manner as the Rotary logo that you see constantly. So it's with pride that I pin you as a Rotarian, and hope that you will wear this with pride in your community and wherever you go as a Rotarian, knowing now that everything you do and say is part of and represents Rotary.
So welcome, Chad, and I'd like to invite those members of the board that are present, if they would come forward and welcome Chad to the club.
Yes. Welcome to Rotary. Everything you've already done.
Oh, thank you so much. Thank you. Thank you. Hey.
Nice to have you both.
Thank you.
And here is your full package.
All right.
Connect you to Rotary.
Thank you.
Thank you, Rashad, and congratulations. Welcome our new member, Rashad. Rashad has already shown himself to be a person of action, and we would like now to do some reports on the people of action. Whoop. You'll note that we have the people of action and the people of action intro, but there's a video there as well that shows some of the activity this past weekend during the container loading. And while that plays, I'd like Stephen Knox to do just a little bit of a summary and a report on what took place with this 84th loading of the containers. Go ahead, Jen.
I just want to thank everyone who participated. We had Tatiana from the Fancher Rotary Club. We had Danielle Bork from the Issue Passport, where she's still satellite. Don Bork, Steve Knox, Bob Early, Jim Belton, Keith Morrow, and John Everhard were the members that were also there on Saturday. We worked for about 6 hours straight. We had lots of hands, and it was a lot of fun for all.
So what are we doing here?
Somebody asked where the container was going. It is the second container going to Guyana in South America.
And here are some photos that show the extent to which they fill that container. So congratulations to those people of action who helped load that 84th container on its way to South America. Some of the other bits of action. Tomorrow night there is a bingo. Rick Coates heads that up, and he so loves the bingo that he stayed here to make sure that he captains this instead of going to Florida. And we're really, really impressed with his dedication to the bingos. The Support Celebrity Dinner is coming up, and we hope that many of you will be getting your tickets for the Support Celebrity Dinner. Michelle and John are working hard on that. The start to finish program continues each and every week, and there are a number of us who are involved in that as well. But if you haven't seen some of the promotion for the Sports Celebrity Dinner, it is now starting to gear up. So we hope you get your tickets, and we'll be ready as well to help out when we get to the day of the event, and as well for the We Are All Stars. And before we move on, a little bit more action. I'd ask David Elliott to come forward now with a special presentation to the Salvation Army. And representing the Salvation Army is Charlotte Dingwall. We understand that Charlotte is being promoted and is only going to be able to with us occasionally, but we're glad that she's here today to accept this check. David?
Thank you, President Jim. As you're all aware, the Rotary Club of London is very supportive of the Salvation Army and everything that it does for our community. Everything from the kettles, and as I was sitting here, I remember there used to be a time we used to have a joint meeting to kick off the Red Shield appeal, but that maybe we should get back to having a joint meeting so everybody gets to better handle what's happening in the Salvation Army. Anyways, it's my pleasure as the chair of the Rotary Club of London Foundation to present today a check to the Salvation Army for our support for everything you do.
Thank you. So when I received the email that we were going to get this check, the timing couldn't have been better around the pressing need around the women that we serve. So you may or may not know that there are more women in London experiencing homelessness than there has been in recent years. So this money is going to go directly to a resource center, for the women around connecting them with more permanent housing. So fitting with their newest member, it'll go towards technology things, computers and things for them to search for housing with support to do so. So thank you.
If I can, I just want to add too, since Jim's got up about $10,000 Children's Center, this year the foundation was notified that CTV, or Bell Media, I think it was Bell Media, was not able to have enough money to pay for 2 ability awards. So the awards for a male and female in the high school who do have disabilities, they didn't have enough cash for that. So the foundation has stepped up, and we are very proud to be the sponsors this year for those 2 very important awards at the Sports Celebrity Dinner.
And the podium. And now, David Elliott, take the podium again as you introduce our guest speakers for today.
Oh, change your name.
Thank you, President Jim. I'll try to change my voice just so it's a little different, not sound like the same person. Today, we have the names right?
No, I
Stefan.
we didn't update the slide, so, yeah.
Stefan cannot be with us tonight, so we're going to keep his word. What was his last name? Sorry.
His twin brother.
Twin brother? Alex. Today, our speakers are Kelly Roberts and Alex Burton of the Roberts Advisory Group at the National Bank Financial Wealth Management. Kelly, a senior vice president and portfolio manager, has over 30 years experience in the industry, and Alex, an investment associate, is a newcomer to Kelly's team. Both are competitive golfers, but of course they spend all their time looking at the market when they're on the golf course. Kelly is a former Canadian junior champion, an All-American golfer at the University of Indiana. Alex played on the OUA Ontario Championship winning team at Western University and is the reigning club champion at the London Hunt Club. Both Kelly and Alex are both active in their communities. Kelly has been at the board of directors for the London Health Science Foundation and serves on the investment committee of Golf Canada and is co-chair of the annual Golf Care charity fundraiser, which supports the London Food Bank. Alex also serves on the committee for the annual golf charity fundraiser and recently joined the Rotary Club of London South. Congratulations. The title of the presentation today is Surviving a Market Sell-Off and the Psychology in Influences Investing. Ladies and gentlemen, please welcome Kelly and Alex.
Thank you very much, Dave.
certainly our pleasure to be here today and talk a little bit about surviving a market sell-off. President Jim, special guests, and members of Rotary. I have a bit of a history with this club. I don't know if any of you remember Stan Roberts in the 1970s. He was a member of this club. And also I was one of the athletes at the Sportsman's Celebrity Dinner back in the 70s. My golf game peaked in 1975. So we believe that we should be very patient and have wisdom when we're looking at the markets. We just got a new puppy dog, and this is not our dog, but I hope he's as smart as that, not to disturb the little skunk there. In the long run, you have to be very patient in markets because emotions make you get carried away with a lot of different things. And we think that the wisdom of having a good process is very valuable to what we do. Deepak Chopra said, "The addiction to security is the biggest cause of insecurity." And when you think of your stock portfolio or investment portfolio, if you watch it every day and it starts to fall, all of a sudden you become insecure that you don't have enough money, insecure that it's just going to keep going down. And that insecurity is very difficult for most people. But it's really the addiction to security that makes us insecure. So why does the average investor have a hard time when markets go down? And it's really loss aversion. If the markets go down 10%, you feel much worse than the good you feel when the markets go up 10%. It's about 2 times as bad. So loss aversion makes it very difficult for people. And so we have to be aware of this and maintain a disciplined long-term focus and make sure that you are comfortable with the amount of risk that you're taking, because you will have some losses in your portfolio from time to time, but you have to minimize them based on your asset allocation. So let's take a look back at history and see what actually has happened. And we put some charts on the tables there, just in case people couldn't read some of these numbers. But in the short run, markets will always have volatility. Now, this presentation was put together in November, and it was at a time when the markets were imploding. And so we thought of a topic coming here today, and we thought it's actually better to think about this stuff when people are feeling better about markets. And they can make good decisions. They can prepare for the negativity that is inevitable. So this it was in November, and it said corrections of 5% per more happen 4 times a year. And this is on the S&P 500 index, which is the index we really follow. And this is data from 1928 until last year. And every 7 months, you'll have a correction of 10% or more, and every 1.5 years, you have a correction of 15% or more, and every 2.5 years, you have a correction of 20% or more. So get used to it. It will happen. This is going to happen in markets. This one's a little busier chart, but really what I wanted to show you with this one is the gray bars that are on the top there, mostly on the top, are the annual returns for any given year. And you can see that this was done before the end of the year in 2018, because it still showed 11% gain at this point, and we didn't end up with that. We ended up with a negative year. But you can see the drawdown, and if you go to the second last chart, or the second last bar, it was a 19% gain for the S&P 500, and the maximum drawdown during the year was 3%, so not much volatility. Everyone was pretty complacent, not too worried. But if you look across the page, you can see that most of the bars are on the positive side. But every year, there is some negative during the year that happens. And if you look at statistics, nearly 3 out of 4 years are positive in the markets. So if you could go to Windsor Casino and you could bet on red or black, and somebody said that black, you're gonna be right 73% of the time, and in red, you're gonna be right the rest of the time, what would you bet on? And I get so many people wanting to get out of the market because they're betting that the market's going down by being out of it. And that's what you really have to be careful of. Why bet against the odds? The odds favor the markets going up. This is a good long-term chart, and it shows really from 1929 until just last year. And you can see that during the period of after 29, there was a long-term, what we call a secular bear market. So it went sideways for a number of years and then went up into 1966. And then went sideways for a number of years. Then it went up into 1999. Then it went sideways for a number of years, and then it has gone up since then, since 2009. Now the sideways movement, now this is a logarithmic chart, so it makes 10% look like 10%. The sideways movement is very interesting to me because some of those sideways movements had declines of 50%. In 2000 to 2003 was down 50%, 2007 to 2009 was down 50%, but in the long run, the markets kept going higher. The other thing that I think is interesting, I don't know if you can see it from where you are, but in 1987, I don't know if this has a pointer, 1987, does anyone remember the 1987 crash? Yeah. 22.6% in one day. I remember it very well. And it didn't feel like a very good day in the markets. But you look at the long-term chart, it's barely a blip in the long-term movement. And that's what we really have to keep in mind. In the long run, the world is going to get wealthier. There's going to be more people in the world. More people there are, there's going to be more commerce. Commerce helps companies sell more goods and helps stocks go up in price. Be positive. So it comes down to the asset allocation decision, and the asset allocation decision is how much volatility can you withstand? Can you withstand your portfolio going down by 50% in a year and a half? And most people say no way. So we got to look at where do you need your money, what do you need your money for, and when do you need your money? If you need your money in 2 years for a certain requirement, then you have to make sure that you've got it in a safe place, because in 2 years the market could be lower. 15 years the market's going to be a lot higher, but in 2 years it could be lower. So one thing we look at, and this is a balanced investor profile with 45% in cash and fixed income, the rest in equities and alternatives. And you can see the volatility on the far right side, where the one-year volatility, this is from 1950 to 2016, the one-year volatility, you could have a return of as high as 29.5% or as low as 15.4%. But on average, you got 8.8% during those one-year periods. If you go out over to the left side of the chart, you go to the 10-year one, it's 1.8% over a 10-year period. It's the worst 10-year period during that time. And think of the things that happened over that period. A lot of very negative things happened, but the worst 10-year period for a balanced portfolio is 1.8%. If you go out to 20 years, the worst 10-year period was 4.9%. If you can have a 20-year focus, you have a balanced portfolio, you will have a likely return greater than 4.9% on average in the worst case scenario. That's assuming we go into a huge recession like we did in 2009, or an oil embargo, or any number of those things that caused the market to go down. So we really look at this and say maintain a long-term focus, but understand the short-term volatilities you can have. And if you have a conservative portfolio, you have less volatility on the one-year basis. So how much can you stomach? Turn it over to Alex.
So one of the things that Kelly has really illustrated with some of the charts we've looked at is markets have volatility, especially in the short term. They go up, they go down, they act in waves, they boom, and they bust. And that's just kind of in the nature of how markets will behave. So how should we react to that? Should we try to time the markets? There have been a number of good examples in history of people who tried to do this. Joel Grambo was a now infamous newsletter editor, got famous trying to short the market on a number of occasions, and unfortunately had a disastrously poor record. Jesse Livermore was most famous because in 1929, he shorted the market prior to the great 1929 stock market crash, which kicked off the Great Recession. You think, what a genius, right? Unfortunately, not so much. Amassed huge fortunes on a number of occasions and then saw them all go to zero. Jack Bogle passed away very recently. He was the founder of a company called Vanguard Funds. And when he was asked about time in the market, he said, I don't know anyone who's done it successfully. In fact, I don't know anyone who knows anyone who's done it successfully. So if we take a look at this chart here on the screen, you'll see that the positive years in the market are in blue, the negative periods are in orange. And there's a saying that markets go down in an elevator and they go up in an escalator. So the orange periods, while they can feel very painful while we're going through them, are really quite short and difficult to know, right? So if you come to us, you come to someone else and say, ooh, I have a bad feeling about the latest crazy thing that Trump tweeted, or about the latest news on Brexit or something like that, and you say, I'd like to get out of the market. The question that person should be posing back to you is, can you time the start of those orange periods to get out? And just as importantly, can you time the end of the orange periods to get back in? It's two very difficult decisions to make in conjunction. And part of the reason that the average investor struggles, this is a chart that we looked at from JP Morgan, and they looked at investor returns over a 20-year period. They found that the average investor, which is the orange bar here on the right, really lagged most other portfolios and indices. You'll see that the average investor in orange did about the same as inflation, whereas a traditional balanced 60-40 portfolio did about over 7%. Why is that? It's because people are emotional, right? We get scared, we get nervous, we panic out when things are going down. When do we decide to get back in? Well, when we see things going to the sky, right? When you see your neighbor getting rich, that's about the time you get back in. Well, that's not a very good disciplined approach. If you can just kind of have a consistent process and stay disciplined throughout, you'll probably perform much better. And this is one of the things we're talking about when it comes to trying to time the market. These are the worst 20 days in the red bars there, and the best days in the green bars. And one of the things that you'll notice, and people don't tend to realize, is the best days in the market and the worst days tend to happen very, very close together. So if you decide I'm going to get out, you need to turn around very, very quickly and get back in. It's a tough thing for people to know in their mind. So here's a chart that looks at 30 years of returns in the US and the S&P 500, which is the largest international stock index in the United States. And it finds that if you missed just one day, just the best single day in the market over a 30-year period, it reduced your return by more than 10%. If you missed the best 10 days, again, just in a 30-year period, it reduced your return by more than half. So the decision to miss just a couple of days can have huge impacts on what you're able to do with your retirement, with your portfolio, with your lifestyle, children's education. So it really speaks to the need for discipline and the need for a long-term focus. So will we ever get all the way out or get all the way in? No. Based on some of the charts we've shown you, that really is a poor decision to make. But we'll recognize realities. So this is an example, once again, of a balanced profile. You'll see that fixed income securities and cash will float between about 30% and 65%. You'll see that equity securities will float in about the same range. So there's room to get a little bit more aggressive at certain times. There's room to get a little bit more defensive, but we will never make a wholesale call and get 100% in the market or 100% out. Because as we've shown, that's just not a good way to deliver long-term results. So where do we go from here? We believe in diversification. And one of the reasons for this, I know this is a bit of a busy chart, we've got lots of colors and numbers going here. But one of the things that's really interesting here is it compares a number of asset classes and their performance across a number of years. So let's pick Canadian stocks. We're here in Canada, which is kind of the brick red color, okay? And what you'll see as you move across is it goes from towards the bottom, second from the top, second from the top, towards the bottom, up near the top again, the very best in 2010, one of the worst in 2011, 2012, the very worst in 2015. Well, effectively what we want to convey with this chart is there's no real consistency to it, there's no rhyme or reason. Sometimes certain asset classes will perform well, sometimes others will perform well, and sometimes many will perform poorly. It's hard to know where any one thing will do in any given year. So rather than trying to make a specific call on where Canadian stocks will perform relative to US stocks or US bonds or emerging market stocks, what we'll do is we'll have a diversified approach where we own a little bit of different things. When one does well, we will take advantage of that, sell into that strength. If one struggles, we'll allocate a little bit more there, because it's probably likely to do better in the future. So, really what we'd like to talk about in this presentation is, what does all this all mean for you? Where can you go from here?
I always like to say that one thing I know for sure is I don't know for sure. And what we really like to look at is what are our beliefs in the market, and we've talked a little bit about them at this point in time. But success is enhanced with proven processes. So whatever you're doing in your investing, make sure there's documents and data and information to show that you are doing something that works in the past and is likely to work in the future. And there's lots of good information out there to show you how to do that. So we really believe in having a consistent process and sticking to it. We are human beings too. We get emotional too. When the markets sell off in December, we're scared too. It's not easy to make decisions unless you have a proven process and you say, okay, when this happens, we need to do this, and it's ready to go, and we can move forward with that. We like to think that investors should understand where they are, make sure they have a plan, act on that plan. It's hard to act on it sometimes because you think of things that you might want to do and then you don't do them, you procrastinate. It's natural to procrastinate. And then monitor it. The plan can change, but it should only change slightly. We shouldn't change it too much. And I know we have a limited time for questions. We also have an opportunity, if we actually buy some individual securities within portfolios, so if people have any questions on individual stocks too, we could probably help you do that. Chad?
Yeah, I'm curious how you guys feel about, the emerging cryptocurrency. How do you guys feel about that? Is that something that you would consider part of the portfolio?
We buy stocks with earnings and dividends, and generally most of the stocks in that area do not have earnings and dividends. However, I do believe that blockchain will change our life in the next 15, 20 years. Yet, the internet has changed our life, and most companies have to figure out a way how to deal with blockchain going forward, like they had to figure out a way with the internet. So yes, I think blockchain has a lot of substance to it. I'm not a big fan of cryptocurrencies. I don't understand them. They seem like Canadian Tire money to me. And I don't understand why they're valuable. But people are buying them, and some people made some money on them, some people lost a lot on them. But we don't buy cryptocurrencies, but we will look for companies who are participating in the blockchain going forward. Yes?
I wonder if you could explain dollar cost averaging and your opinion on that approach for a long term.
If someone is saving on a regular basis, they have an advantage with dollar cost averaging. So they can purchase, when the markets go down, more securities because it's a lower cost, and keep on doing that. When the markets go up, they're purchasing less securities, so they're not purchasing as much on the upside. With dollar cost averaging with a new portfolio, say someone sold their company and came in with $1 million and they want a dollar cost average into the market, generally that doesn't work very well because the markets generally go up. So if you dollar cost average into an up market and it doesn't pay off. But if someone is saving on a regular basis, I'm a big believer in dollar cost averaging.
What are your thoughts about gold in a portfolio?
I heard Warren Buffett talk about gold, and he said you could put all the gold in the world in a baseball diamond cubed. And he said, I'd rather own a farm. And I listen to that and I say, you know, gold is a speculation to me every once in a while. And actually, I think we're getting pretty close to a time where we could buy some gold and make some money on a trade. But I look at it as a trade rather than a long-term hold. And I don't know gold as a store of value anymore in the world of the way they monetize currencies and all this crazy stuff they're doing with currencies nowadays. Gold should be $1 billion, and it's not. So I look at it and say I'm not a big fan of it.
Jim?
Are there portfolios that consider companies that operate on a social and environmental consciousness?
There are a number of fund companies who have come out with social conscious portfolios, and they've had some good success too. And certainly with the millennials moving into the investment scene, there's a lot more people interested in that area, and I'm sure there'll be more opportunities for that. The problem is a lot of the companies that are supposed to be socially conscious, you have to look at the whole company. And if they buy something from China, are they still socially conscious? Because what's the manufacturing plant like there? And that's what we really run into. It's very hard to make a decision. And you know, our obligation to our clients is to make them the highest return possible for the least amount of risk. And sometimes we're buying companies who might not be as socially conscious as others. So we don't particularly pay attention to that, but I don't really like to buy tobacco stocks just as a ongoing thing.
Rick, you had a question? No, okay.
I'd like to comment on Boeing, not specifically necessarily, but there are companies that get hit by, something in the market that tips the scale and makes it very dicey. What's your strategy in dealing with individual companies that have been hit in the market?
We own Boeing, so we're close to that one. One thing that we look at, it's like everything else, we diversify. So in our U.S. focused portfolio, Boeing at the maximum might have been 5 or 6% of the portfolio. The stock jumped from the low in December up to a few weeks ago. It was up 50% in like a 2-month period. So we actually sold half of our position, not because we thought something was going to happen, but we sold half of our position up because a stock that's growing at 12 to 15% a year, and it actually jumps 50%. It's not logical. It's not. There's no way it can keep going up at that pace. So we know it's going to stop at some point in time. So, but Boeing, I look at it and I keep looking at all the papers on it, and Boeing is a fabulous company. There's only one competitor in the world. They've done a really good job, and I think the information they're giving investors in that crisis is pretty good. They'll be back on their feet at some point in time, and we'll probably add to our position again.
Take one more.
It's diversification is important. That's 5% max in any one stock.
There have been recent changes in Ontario about the obligations for investors to disclose the fees, commissions, compensation they receive, and that are taken from an investor's portfolio. So if an investor invested $500,000 with you and you used your process on an annual basis, what would be the dollar amount of compensation your firm would receive?
I wish there was an easy answer because it, I hate the word it depends, but it depends. And if you're taking very low risk, it might be 0.5%. If you're taking a lot of risk, it might be 2% a year. So
2% on the 500,000.
On the 500,000. So it really, it does change. And then there's ARC fees plus the underlying funds that we might buy, they would have MERs too. So there'd be additional fees on that. But it's really important you watch the total cost of your portfolio. The total cost includes the bank or the brokerage firm you're dealing at plus the MERs on the funds. But, you know, I would like to have, you know, if someone gave me $1 million tomorrow and I said I could give you $2 million the next day, but my fee's gonna be $500,000, and they'd say, okay, I'll take $500,000 profit in a day.
Are you making that offer, by the way?
Obviously not. But the reality is fees are very important, because if you have an equal product at different fee prices, then you need to pay attention to the fee. But if you've got somebody who's got superior returns on a consistent basis and they're charging a higher fee, sometimes it's worth it.
Okay. Gentlemen, Alex and Kelly, I'd like to thank you on behalf of the Rotary Club for coming today. And in appreciation of your presentation today, we will be giving you each a certificate immunizing 50 children against polio in your name as a thanks for being here with us today. I have one for Alex, and I have one for Kelly. Certificates.
Thank you, Kelly and Alex. Well, now, speaking of things financial, we welcome our Sergeant at Arms, John Finan, who has enough time to perhaps put a little bit into the kid. Please welcome our Sergeant at Arms, John Finan.
Great presentation, guys. This is kind of like the dividend process in Rotary. You show up and take your money and distribute it. So, Alex, you're a new member at South. Good for you. Thank you. I got my teeth there. We had a broker there. We joked one time. Somebody said he made me a millionaire. Of course, he started out a billionaire. So, afternoon, gang. Okay, let's start off with some March birthdays that we may have missed. Carol, is that you?
Yes.
Were you here last week?
No, I wasn't.
Okay. You stand up and sing happy birthday. You know how to do it. You put $5 on the table. Right? Happy birthday to you. Happy birthday to you. Put your $5 on the table. Happy birthday to you. Very good. Happy birthday. Just out of interest sake, you're sharing your birthday, the date anyway, not the exact day, because he was born much earlier. Robert Frank Nevin, 1938, and NHL hockey player. But what's interesting is he's from Porcupine, Ontario, or South Porcupine, Ontario. Anybody know where that is?
Near Timmins.
It's near Timmins, right. It's almost a suburb of Timmins. So, all right, hold on. Okay, Rotary pins. I'll let you all self-identify. If you're a Rotary member and you're missing a pin, please see our man with the red bucket. Yeah, it's a little light today, so we have a little bit of time to make up. Anyway, Rashad, welcome. Welcome to the club. You're a red badge man now. Excellent. Very good. So first of all, I'm going to throw in a couple of bucks because I missed. They said when all the directors should come up and shake your hand, and it wasn't that I forgot I was a director. It was just that I was Googling La Bella Mafia, a clothing company. I was ordering my swag from that company. So perhaps over the next little bit, you'll tell us about that.
Yeah,
so
sure.
That's interesting. Yeah. I didn't get a chance to scope it all out, but I bookmarked. I'll be back at the office and ordering my La Bella Mafia stuff later on. So anyway, okay, let's continue on. Good things happen to good people. Let's start off with happy bucks. Who wants to kick it off? Yeah, Don.
Got a couple bucks to say good to be back for the winter for a couple of days.
Very good.
I come to London once a month, but hardly ever get here on Monday, so delighted to be here. Good to have Kelly here, an old friend, talk today. And I was so delightful that we got the chance to YouTube a meeting a couple of weeks ago. That was most helpful in understanding what we're trying to do as a club. So thank you very much for that.
Excellent. Good. Well done. Thanks. Okay. There's lots of notes. Yes, in the back.
So I ran out of money last week, so I'm contributing again. between media and volunteers, we served about 1,600 people for dinner and had no issues whatsoever. So
Wow. What kinds of food did you serve? Was roast beef on the menu?
it's actually tenderloin.
Tenderloin, okay. Now, do you guys have any horseradish at all? We got to the end of the line there, and I'm like, oh, I'm going to put on some of this horseradish, and it ended up being cheese, which is fine.
Did you ask John for horseradish?
I didn't ask, no. No, I just griped about it and continued on my way. Yeah. I'm not looking to solve any problems, I'm just looking to identify them. So you're all caught up, right? After that $10 got you? Okay, all right, very good, excellent. Okay, other positive notes? Oh, Jim, yes,
Yeah,
President
well,
Jim.
I'll put in a happy buck as we welcome Rashad. I think he's going to make a fantastic Rotarian, and he's already made contributions with the YouTubing, and we hope that we can provide the equipment that's going to make that a permanent feature. And a couple of bucks for the Juno weekend. I kind of missed the whole thing. I didn't get out to any of the Juno events, but we did go downtown yesterday just to get the atmosphere, but we picked the wrong hours. We were down there between 2 and 3 o'clock. There wasn't anything going on in London Place, and we couldn't get into the side tent, but we saw that there was a lot of excitement. But walking through the market, I did see one celebrity, I think. As I walked through, there was this gentleman who was quite refined in his dress. He looked up, and it was Borja Solomon, who used to play for the Leafs. I said, there's Borja Solomon. Who? But I think he was just one of the many Canadians that were in town for probably one of the most exciting weekends the city has ever seen.
Excellent. Actually, just before we go on, a show of hands, who went to a Juno event? By show of hands. Oh, that's visible. Okay, so if you put your hand up, throw in a buck. If you didn't put your hand up, throw in $2. Okay. You missed a lot of fun. Okay. Alex, Kelly, did you guys get out to this at all? Nothing. Are you allowed out after dark even? Anybody under 30 should have been out. I was so jealous. I think I turned into a punk in a couple of nights. Okay, David.
Happy Buck. I just want to say that the sales for the East Coast Kitchen Party are underway, but I do want to throw out a challenge. Rotary Club London South is already about 4 times the number of tables than this club. And I know there's everybody saying they're coming, but we need to see some forms filled out. So if you could get on the website, I'm going to send out probably today an opportunity for you to do it manually, because some people like to print it off and write it in. But that'd be good. I also appreciate John Finan for being part of the committee this year. He's going to be collecting the auction items.